Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us back again, our regular Gregory Mannarino. He's a former Bear Stearns floor trader in the 90s. He has his very popular YouTube channel, Gregory Mannarino, and also TradersChoice.net, where he gives free trades on the internet, free as an FREE. Gregory Mannarino, thank you for joining us.
Great to be here, Greg. Thanks for having me back.
Markets, crazy. Good news is bad news. Market up 200 points. With the gold market, bad news is bad news. Market for the gold market goes down. What's going on?
Well, what's going on? It's it all boils down to, it's the Federal Reserve. It's the Federal Reserve who is hell-bent on hyperinflating the stock market at the expense of the U.S. dollar. The Fed is the sole driver for the markets at this time. They've caused an absolute complete disconnect between the economy and the market. And it's whenever that happens, you know you have a bubble. So equities right now are in a bubble. And if the Fed were ever to stop doing what they're doing, it's party over. At that moment, we understand that just the hint that the Fed may be pulling back on QE, which they cannot do, ever. They've really painted themselves into a corner here. We're done here. And there's a lot going on here, Greg, and I made a bunch of charts for you and for your listeners, and some fun facts, which I want to talk about. So where do we start here?
Well, you were telling me off camera that this is a big pump and dump. So you're saying that the Fed is blowing this market upward, and at some point they dump it, and the public gets hammered again. Is that what you're saying?
It's always the same story, Greg. It never changes. I urge everyone to do their own research. Look back on the history of the stock market. The Federal Reserve is one thing, a serial bubble machine. They create boom and they create bust. They create boom and bust. And what does that do? Well, it creates an enormous amount of wealth for certain people. And again, it plays into, the sad fact that the aggregate public tends to get into something way too late at the top of a bubble. The Fed relies on that. And then when the stuff rolls over, they short it all, and those individuals end up getting fleeced. It's disgusting. They want to convince us of a lot of things, Greg. There's no inflation. The market is not in a bubble. But let me just go over a few really important facts. And that is this. I've made a bunch of charts for you and for your listeners here going back to 2003, so 10 years. So we can kind of get a perspective on this. I think what most people don't realize, number one, is that incomes are falling. We are earning less money now than we were 10 years ago. People really, when I say that to people, they're like, really? I don't understand that. Well, let me just show you a chart here. This is from the U.S. Census Bureau. This is a chart. All right. Now, 2003, median income was $53,000. Today was somewhere around 50.
That's an enormous drop, really.
That is an enormous drop. But it gets better than that, Greg. So we know that incomes are going down, but what else is happening? How about this? Same timeline, 2003. That's the dollar value since that same time. So look at the purchasing power that has been stolen away from those same dollars that people are earning less of. So what does that mean in the grand scheme of things?
A double whammy.
A double whammy. But here's my fun facts. Fun fact number one, I guess, would be median income has fallen over $3,000 a year. That's significant in 10 years. But the price of gasoline, let's look at just gas, because I think most of us have cars. Okay, gasoline in 2003 was $1.72. Today, average price is $3.65. That's more than 100% increase. Interesting. Loaf of bread was $1 in 2003. Today, it's $1.88. That's huge. How about eggs? $1.01 in 2003. Today, $1.54. Milk, Greg, $1.79 in 2003. Today, it's $2.79. But they want us to believe there's no inflation. Oh, there's no inflation. No, not at all. So, don't worry about it. If you ask me, this is hyperinflation. In the face of a falling dollar, falling incomes. But that brings us to the Federal Reserve's job right now, and that is creating an asset bubble. They reinflated the equity bubble. Let's just look at a few things. So this is the Dow Jones Industrial Average. Look at that trend here. This is the crash 2007, 2008, but we are in an uptrend. This is the dollar, same time period. So the market has risen here because of the falling dollar. What I've done here, one more thing before we move forward.
That's very interesting, Greg. Market's up, but the dollar's down. How the market should be down. I mean, we got inflation. We should have higher interest rates.
Well, that's true too. But the Federal Reserve is going to, well, they can't allow that to happen for many, many reasons. They can't allow the dollar to be strong. We're at the top of right now in the dollar value, which we'll talk about in about a second. If they will allow the dollar to be strong, it would hurt the market. Let me show you the relationship here because I made a chart for that too. What I've done here, Greg, this here is that same chart of the U.S. dollar plummeting in value, and this pink line, I don't know if you can appreciate it, I hope you can, is the Dow Jones Industrial Average, how it's risen. Look at the inverse relationship, dollar down, market up. Now, just to outline this further, look at this trend. This is the dollar value going down. This is the market going up.
Huh.
It's inverse.
I can see it.
The whole way down. And you can see how the trend is continuing with these arrows here. Dollar value down, market up. All right. And we're at a top right now. In my opinion, we are at the top of a dollar. Look at all these peaks. Look how they kind of line up here on it. They're like hitting a trend line. So the dollar again is going to get hurt here. What is that going to do? That's going to push the market higher. Personally, and I'll probably take a little heat for this, I believe the market will be higher at the end of the year than it is now. Why? Because they're going to hammer the dollar. They're going to hammer metals too. Doesn't make any sense, does it? Metals are based in dollars, but if the dollar value goes lower, metals should be going higher, right? Well, that's a whole other thing that we're going to talk about too. Maybe we should talk about that now.
Well, let's do, because the U.S. Mint out last week says, hey, we have record demand, record. This is according to the U.S. Mint. They're buying all the blanks in gold and silver they can. They're even going to probably start a platinum coin because demand is so high. I don't get it. Prices are going down, but yet physical demand for coins, boom, is going up according to the Mint. What do you make of that?
Well, I think anyone who has their eyes open here understands the demand for these metals has never been higher by the richest people in the world, by countries of the world who are acquiring this in mass. China, India, Russia. It's no secret. We all know this.
So are they just trying to scare people out of the metals so they can acquire more at a cheaper price? Is that what they're doing? Or are they trying to make the dollar look better by making metals look worse, or all the above?
Well, all the above to a certain degree. It's about perception. This is really what I try to tell people. It's not about reality anymore. It's about perception. Again, they want us to believe the economy is recovering. Meanwhile, salaries are falling. The dollar value is plummeting. Record amounts of people on government assistance. As a matter of fact, in the 1970s, I was reading an article recently. I was kind of blown away by this myself. People receiving public assistance in the 1970s was 1 in about 50 or 55. Today, it's 1 in 5.
Wow. So
that should tell you that there's no recovery. This is all nonsense. And again, the whole thing is being played as a game. This is a game. Again, they do not want us to believe, or people to believe, that gold and silver are real money. They want you to believe that pieces of paper, like if I were to draw like a 100 on here, is real. And they can't have people in real assets. They want you in paper because it can be manipulated. Now, they're manipulating the prices of the metals, no doubt about it. But let me just float something out there, okay? Let's say company XYZ just decides to go public. Your company, Greg Hunter's company, XYZ, and you're selling, I don't know, Greg Hunter t-shirts. And you're gonna have outstanding shares. You're gonna float out there that people can buy. They can invest in your company. Okay. Your IPO comes out, people start buying it. They start buying it, and your stock value rises. Now, all of a sudden, people say, hey, I don't want to hold Greg Hunter's t-shirts anymore. I'm going to get rid of them. So they dump them. Well, what does that do? Well, these shares outstanding grows, right? Well, that are available to the public will grow, and the price of your stock will drop. Okay. Now, let's put another perspective on this. GLD and SLV, I made a couple of charts. I'll show you them in a second. These are supposed to be backed by the hard assets. So if these things get sold, there should be someone buying it because these are constants. It's not like a float in a company that has shares outstanding out there. These are hard assets which are relatively constant, and they're being accumulated. So how is it that the metals prices, according to GLD and SLV, are falling off of a cliff? What are they doing to it? They're evaporating it? They're blowing it up? No, the metal still exists. So how is the price falling? And it's being accumulated. Doesn't make sense at all. But with that said, I made a couple other charts for you. Here we go. This is a little difficult to see, I think, because my printer was running out of ink. This is GLD, Greg. This is what has happened to it. Went up here, and we went all the way down here. Now, I don't know if you can appreciate this, but these are called Fibonacci retracements. We've went through just about all of them. The next one down, and I'm not saying this is going to happen, so I don't want to spook anyone, but the next one down, and there's a possibility we may hit this because they're gonna try to again spook people out. Would put gold at somewhere around $1,270 an ounce.
Well, they're desperate, aren't they? I mean, aren't they desperate to keep this game going, play for time, do whatever, and acquire precious metals? I mean, you have George Soros gets out of GLD, the chart you just held up. So Soros gets out, and he doesn't get cash. He gets paid in physical metal out of GLD because he was such a big investor, and that was a deal he got that when he exited, he could get out. So he took the metal. So, you know, I mean, people are acquiring countries, sovereign funds, big investors, hedge funds. They're acquiring the metal and selling the paper. Even Terrence Duffy at the CME, the Chicago Mercantile Exchange, says, you know, people don't want the paper contracts. They want metal. So isn't this just a way for rich people to get cheaper metal prices?
Absolutely. And who's really laughing at us here? I want all of your listeners to sit back and imagine this. It's the other countries of the world that are laughing at us. They really are. These items are priced in U.S. dollars. That's where most of the manipulation is coming from, and they're acquiring it at these really suppressed prices. And they're laughing at what's going on here, and they're taking full advantage of everything. There's no doubt about it. Who isn't? Who are the people that are getting hurt in all of this? The aggregate American people, who I believe, unfortunately, are the least informed of any other nation in the world. At this point, they're being led to the slaughter. Period. The end. That's my take on this.
So you're saying that they're pumping up the stock market, right? I mean, you called it. They call the Federal Reserve serial bubble blowers, right?
That's exactly what they are.
And right now we're in the middle of a big pump.
Mm-hmm.
When does the dump happen?
That's a great question, Greg. I think the dump at one point, the Federal Reserve believes that they can control the velocity of money. They can control the interest rates, and they're doing everything in their power to continue to do that. I have been telling everyone, forget watching the equity markets if you're looking for this bubble to burst. You need to be looking at the bond market. At one point, Greg, people are going to get sick of holding these things, and I've been saying this for a while now. They're going to dump them, and when they dump
the bonds,
those
treasuries,
when they dump those, no matter what the Fed does, what are they going to do? All right, so let me outline this so people can understand how this works. When people start dumping those bonds, that's going to force interest rates higher. And we've seen a pretty crazy swings lately in the 10-year, as you know. I think that's getting some people nervous out there. But at one point, we're going to see a massive sell-off here in the bond market, and it's going to cause interest rates to spike at an uncontrollable pace. What is that going to do? It's a very simple relationship, just like all these other things I've been showing you. When the bond market sells off, that's going to put enormous pressure on equities. Equities at that point will sell off, and they're going to sell off hard. And again, this is a concept I discuss all the time, is that cash does not disappear into money heaven. It ends up in other places, and it's going to end up in commodities. And that's why you're going to see gold, silver, and crude spike to heights that people are not going to believe as we move forward. When is that going to happen? That's very difficult to really put a finger on here. I do not believe it is too far off. A couple of years maybe. We'll see how this plays out.
If the metal prices get, just in closing and quickly, if the metal prices get hammered down to $12.70 or whatever, are you going to find more metal at $12.70, or are you going to find a further stampede into metal to get it? After all, it's on sale. I mean, what's your prediction? They crush the price, they finally break the metal market, or people are just going to keep pouring into it?
No, people are going to keep pouring into it. The smart people are going to keep pouring into it, and we're going to see premiums rise as well. At these levels, what people do not realize, and I have friends on the inside that I speak to a lot, the miners are operating with zero profit. So they're not going to mine. Mines are going to close. When mines close down, what is that going to do? That again is going to force the prices up. Again, all of these distortions that have been created by the Federal Reserve stealing away the free market will correct. The day of reckoning is not far off, and people need to be ready for it.
Gregory Mannarino of TradersChoice.net. Also, your popular YouTube channel. You can find it through GregoryMannarino.com or just Gregory Mannarino on YouTube. Gregory Mannarino, thanks for joining us today on USAWatchdog.com and giving us your sharp-witted analysis.
Thank you, Greg. I really appreciate it.